first step is making a decision. Here's what my vision is. And once you have a vision, there's this clarity and providence happens where resources show up and people start aligning and things happen. Most people are choosing to stay where they are, and that has everything to do with their environment, the people that are around them. And I remember 25 years ago, I started listening to Tony Robbins constantly. That's all I was doing. I basically stopped talking to my family, kind of got rid of my friends, and people think, wow, that's really mean. That's like, you're a terrible person. And I said, my vision was more important than staying with people that wanted to stay where they were. I had a bigger vision, so I needed to be around people. It's the environment. The biggest hack is once you've got your vision, you change your environment. It's what's going in your ears because then that's your reality. And so if somebody's making 18,000 or 40,000 or 80,000, whatever currency, there's a shift that you have to make. And I don't care if you have zero. I've been to zero 4 different times, and it was all about here's my vision, and I go create it. And I'm a college dropout, so I'm not smarter than other people. I'm just more committed, more resilient. I have a bigger vision. There's a magic in thinking big, and it'll pull you. It's like a north star. Most people they say I'm going to do what's simple, what's easy. It's not wrong. It's just understand where you're at and why you're there and where you're going. You're probably going to where you're going to be where you already are. That's for most people, it's a merry-go-round. It's the same thing over and over again, and it's always a choice.
Damien Lupo, it is a pleasure to welcome you to the Inner Entrepreneur podcast.
I'm super happy to be here. Thanks for having me.
Well, I'm delighted to have you. I was just thinking, I've had many entrepreneurs, founders on this show, but if I was giving out an award for the most companies founded, I think maybe you're going to be out there on your own. So my first question is, exactly how many companies have you founded at this stage?
I think we're getting close to 80. There's, it was 70 for a while, and setting up things over the last few years. I think we're probably close to 80, and yeah,
80 companies.
that seems like a lot, doesn't it?
Well, my next question is why? Why would you? The reason I say why is this is I'm I'm not going to try and compete with you there. I'm less than I can't remember. I'm around a long time, but less maybe five or something. So there's no competition. But for me, it was the two remain going very long time, very successful, and the others no, didn't work out or whatever. And kind of once I found what worked, I doubled down on that. So maybe I don't have the appetite for serial entrepreneur. So what has led you to start so many companies, and how many of them are in existence and still successful? Are you still involved in, et cetera, et cetera?
Well, I'll say this: it may be that you're just smarter and I'm slower, and I just have to.
Extremely
I
unlikely.
mean, it's a lot of these companies, to be really fair, many of them, probably more than half of them, didn't go anywhere. They were really just opportunities for me to learn and stair step. And the stuff I'm doing today, that's the company that I'm a co-founder of and the chief investment officer of FrameTec, it's closing in on $1 billion valuation. And that took
Mm.
all these companies and all the things, and not just me, it was all the other guys that were part of my team that started it. I looked at all these different opportunities. I thought in the beginning when I was, in my teens and then
Mm.
20s, I thought, oh, I'm going to go into business and make money. I made millions of dollars with that approach and then lost it all and went homeless. And what I didn't
Mm.
realize is I needed to go through a lot of different things. None of the companies that I started back in the 90s and 2000s, a lot of those were real estate and insurance companies. None of those are still in existence. There's just one company, a gold company that my dad started in the 70s, that's still in existence 50 years later. But all these things, the
Mm.
point of all this is these were all opportunities to learn things that you'd never learn in school, and it was really more about the emotional intelligence going through these things and the wisdom you get by doing it. You can't get that in university. You're gonna have to be out in the streets, in the trenches, getting muddy and bloody, as we say. And so now there's 5 6 companies that are going from millions to hundreds of millions in valuation and revenue. And that was, I mean, all this stuff stair steps, and I think that's the point. It's required to have, if you say I'm going to do one time and then it's either make it or break it, you shouldn't even start, honestly.
No, you've no hope. When I talk to entrepreneurs, I think that the what makes them different to people who are not successful in business, not suggesting all entrepreneurs are successful, because obviously they're not. I think one key difference is I don't think it's that they're smart or any of that. I just think that they don't stop.
Correct.
I mean, nobody, nobody with a brain in their head keeps going until they've done 80 companies, but if you do, you end up, as you have, with several companies with enormous valuations. So it's like, but what sort of fool keeps going to 80 companies? And you go, well, maybe that's
That is the secret.
you're bet.
No, you're 100%
I
right.
mean, you're just increasing the odds of your
Eh, well,
success enormously.
we've most people have heard the statistic that 4 out of 5 companies die or dead, or 9 out of 10 within 5 years, and then 9 out of 10 of those are dead
Yes.
in the next 5 years. So you look at the odds and you think 1 in 100 is going to be still an enterprise in a decade, and that's because you know. Statistically, most people aren't going to do 5 companies. They're going to do one. They're going to die, and then it's done.
Yeah.
So I think you have to take a step back, and one of the questions is, are you committed? Like a lot of times, people will hire coaches, or they're thinking about hiring a coach or a mentor, and they go, I don't know if this is if it's good, if this person is worth it. And I go, you shouldn't do it. And they go, why? I go, because you're not committed. That's the difference.
Mm.
This person could literally nod at you and let you process things and help you grow by just being there, holding the space. But when people
Mm.
aren't committed to their business or to the therapy or the coaching or whatever, they're not ready to do it. And people make the mistake of saying, I'm going to go try this business. I'm like, no, either you do it or you don't do it. Like Yoda said, there is no try.
Mm.
And that's the
Yeah.
big shift. If you are all in and you go for it, 80 businesses means I just don't quit until it's time to quit. And the question is, when do you quit? That's where mentors are really valuable, or having 50 or 60 companies. You're like, okay, instinctually I know it's time to kill this puppy. Or sometimes it's just I'm at the 1 inch line. I'm right at the end, right close to it, and it feels like I'm never going to get there, but it's persevering. So entrepreneurs that understand that are the ones that they don't know what quitting means. They're resilient. They're like honey badgers. That's my spirit animal, is the honey badger. It's resilient, relentless.
It's but it's also like redefining it, because um I mean, it's redefining what failure is, because I'm sure when you look back after all of the companies that you set up are no longer in existence, you can frame it and go, "Oh, I was a miserable failure," or you can go, "No, I've learned massively. I've learned massively from this, and because of learning massively with this, I'm now happening to be very successful in a small number of companies," and that's the difference. But what I'm wondering is, I suspect that when you, and then maybe we'll go back to the beginning of when you start, but I'm suspecting that some of those failures, if you don't mind that world, must have been awfully hard to go through.
Well, and it's interesting because in the beginning of building things and doing business, I think we naturally look at things like, oh, that either worked or I failed. I'm a winner or a loser. And now I don't look at
Yeah.
anything as failing. I just go, oh, that didn't work. And what did I learn? And I do it differently. Like I know that I'm not going to win in my head. I've got to go do something. And people are waiting for all the lights to be green before they go out, leave the driveway. And in business, you just have to go out there and say, okay, I have no idea. I'm going to figure out how to drive this car on the way. I'm going to figure out how to use this parachute after I jump out. Like that is business. And people say, well, I want to learn everything. I want to go to seminars. I want to go to college or whatever. And the reality is there's just so much more beyond that. And once you shift past that whole idea of failing into a space where you can't wait. Like I go out and I say, okay, what am I going to do that's going to be a flop or it's going to be unsuccessful? Like I can't wait for that thing because it's stretching and growing. And the things that are obvious, the speed at which I can get things done and move through is because so many things didn't work. And I go, oh, got it. Now I understand. And I understand it at a cellular level. Once you have that, that's called emotional intelligence. It's called wisdom, and you're able to move at the speed of light, and I call it the speed of trust, like Stephen Covey's book, the speed of trust.
Mm.
When you and it's trusting other people, it's also trusting yourself. That's one of the biggest
Mm.
keys. When you trust yourself because of your experience, you're able to move decisively, and you don't think about, well, I need to wait and see if I can get it all perfect. You move, because the reality is we're almost everything is non-fatal. It might cost you a bunch of money, and then that's just part of
Mm.
business. But we have this thinking that if I make a mistake, it's going to eat me, as if there's dinosaurs or tigers or something. I grew up in Alaska. There were actually bears. If you made a mistake, you could be eaten. Most people don't have that problem, no
Mm.
matter where you're at in the world.
But there are some mistakes. There are some mistakes that are fatal.
There, it's very rare that
I mean, do
most.
you analyze the? I mean, do you? I had a mentor at one stage, and he would say that when you know, ask yourself, what are the consequences? What's the upside? What's the
Yep.
downside? And can I live with? Can I survive the downside? And it was quite simple. If you know, if you can't survive the downside, then you don't freaking do it. The downside may be expensive, may be costly. If you can live with the downside, then do it. But if the downside is going to kill the rest of your businesses, or you're going to lose your home or something, it's probably not worth the risk.
It's true, and there are phases of what's acceptable for downside. In the beginning, it's you have to take those risks, and at some point you start like one of my mentors 25 years ago said, "Hey, you guys, there are a bunch of us that were making good money. Like we were all millionaires at that point. We had our real estate. We thought we were top dog, very smart." And he said, "It's you guys are all making a mistake because you're putting all your chips on the table constantly, and you're never taking anything off." And we said, "Ah, whatever. We're making so much money with our money." And then
Mm.
we all ended up blowing up, and I ended up homeless. And so that was part of the process. Now, was it fun? No. Did it hurt? Yeah. It also didn't kill me. I don't want to do it again. So I have a different way of approaching life. It doesn't mean so one, I'm not I don't hesitate in taking risks, spending money, making mistakes, if you will. I also don't put everything all in on anything, even the things that I control, because there's the black swan
Mm.
event. There's the 9/11 where you weren't planning and the insurance company goes, "We had a $4 billion loss today that was not even part of our world." And those are the things that you've got to be mindful of. Do you want to start over? And if you're going to get any traction, you have to be willing to not diversify, to go all in, to throw everything on the table. And then there's a phase of when you stop doing that constantly, unless you're psychotic. And if you're psychotic, then that's just how you operate. I think that there's a
Mm.
natural progression towards the idea that I don't want to be homeless and start over. I have the T-shirt, I have the badge, I don't need to do it again.
Yeah, I mean, it sounds like you're saying something I was wondering about. I think I have become more risk averse as I've gotten older, simply because I have I have more to lose. And I look at my life and go, you got a pretty good life. You've got a lot of things sorted, and another business, another investment is not going to shift the dial for you. You might like it, you might enjoy it, but it's not going to shift the dial for you much, and the happiness dial or whether it's not going to change that. So I find I've become more risk averse. And it's two things. One, it sounds like you have an enormous risk tolerance. That's the first thing I'm picking up. But secondly, is you sound like you're toning it down a little bit. You're kind of going, well, I'll take some risks, but not crazy risks.
It's true, and I'll take what most people would perceive as large risks. They'll because I got one of my deals, I have $30 million on the line. Well, that seems like a
Mm,
large amount. It is if it's everything you've got, but $20,000
mm,
at risk is more than $30 million to somebody if all they have is $10,000 in the bank and that's it, and they're
mm,
risking 20. So it's all relative. So I. But you get more comfortable with numbers that get bigger. The key, and this is a really interesting thing that I've learned over the years, is there is a phase like getting to a certain number, getting to a certain level of financial wealth. There's beyond that, it's actually more problems. And I think I heard Will Smith being interviewed by the guy that has the School of Hard Knocks, and they were asking about wealth. And Will's worth hundreds of millions of dollars, and he said, so, he was asking him about the levels of wealth. And he said, after a certain number of millions of dollars, it's stressful past that. Like it's actually just more stress because it's more complicated. I know for a fact from experience that that's true. There is a stress if you're too low. And so my
mm,
suggestion for everybody is that you should be figuring out how to get to $10 million or 10 million euros. And the reason being, a million doesn't give you freedom. It doesn't give you certainty. 10 million does. 100 million is going to be more stressful. Yes, you can have a bigger jet, but it's in terms of lifestyle or freedom to do what you want, there is something about 10, and it's not just the money. It's what you have to become to go to 10 million. You can't accidentally bump into 10 million, like unless you're a founder of Google. But let's just pretend we're not dealing with
mm.
unicorns and lottery
Yeah.
events. At a million, you can bump into it. It's not even hard. And it doesn't mean you know anything about money. But to evolve into the person that knows how to create 10 million, here's the thing. You are invincible, you're impenetrable. If the money goes away, you have the confidence, you've got the muscle, you could go recreate it. I've had people that showed up and they had a couple million and they were scared to death because they accidentally got there. They're 55 years old and they thought, man, if I lose this, I can't spend 35 years recreating it, and I
Mm.
don't know how to do it other than maybe the stock market will work. So I have my focus with, and I built this little booklet people can download called Turnkey Retirement, and it's how to go to 10 million in 10 years or less, and it takes about 10 minutes to read. It's a 10-step process, and it was really boiling down all these companies and all this thinking. How do you do that? How do you actually become financially free from worrying about money? And it's that evolution.
So in this in this talk of turnkey retirement, um, where's the starting point? When I say the starting point, I mean I had I photographed something on my phone a while ago that I came across, and it had, I don't know if it had the US in it, but it had all of Europe, and I had what the average income was in all different countries. In Ireland, if I remember, I'm going to guess that it was about 40,000, 35, 40,000 euro was the average income. Now, when you go to Spain, where I am at the moment, or if you go to Portugal, like lot of other countries, that average income drops significantly down to where the average income in some cases is, you know, 15,000, 18,000 euro or something. So, um, so what that tells us is the majority of people are never seeing €1 million, never mind 10 million euro. And we spoke earlier about the fact that about 96% of companies never get beyond €1 million. So who are you speaking to? Are you trying to help them? Are you trying to help the masses, or are you trying to help an elite group of people who have moved into that bracket of what you might not call wealth, but to most people, if they ever saw €1 million, would consider themselves extraordinarily wealthy.
I totally agree. That's and when you think about the whole population, the whole globe, that is not
Mm,
who I'm speaking to. There's lots of people to
mm,
help, people make an extra few dollars or to boost their income.
mm,
The reality now with a global environment is anybody and anywhere, because it and you can get internet on a cell phone, like it's
mm.
really everywhere.
Yeah.
The reality is that there's wealth opportunities and they're changing at the speed of light because of AI. So anybody anywhere can create wealth. I used to have people that worked for me in Africa, and it was interesting watching them go from literally just living in the dirt. I mean, just poor, poor, poor. And I've been to Africa numerous times, and that's one of those places where you can see the ability for people to connect. Now, you asked what the first step is. First step is making a decision. Here's what my vision is. And once you have a vision, there's this clarity and providence happens where resources show up and people start aligning and things happen. Most people are choosing to stay where they are, and that has everything to do with their environment, the people that are around them. And I remember 25 years ago, I started listening to Tony Robbins constantly. That's all I was doing. I basically stopped talking to my family, kind of got rid of my friends, and people think, wow, that's really mean. That's like, you're a terrible person. And I said, my vision was more important than staying with people that wanted to stay where they were. I had a bigger vision, so I needed to be around people. It's the environment. The biggest hack is once you've got your vision, you change your environment. It's what's going in your ears, because then that's your reality. And so if somebody's making 18,000 or 40,000 or 80,000, whatever currency, there's a shift that you have to make. And I don't care if you have zero. I've been to zero 4 different times, and it was all about here's my vision, and I go create it. And I'm a college dropout, so I'm not smarter than other people. I'm just more committed, more resilient. I have a bigger vision. There's a magic in thinking big, and it'll pull you. It's like a north star. Most people just they say I'm going to do what's simple, what's easy. It's not wrong. It's just understand where you're at and why you're there and where you're going. You're probably going to where you're going to be where you already are. That's for most people, it's a merry-go-round. It's the same thing over and over again, and it's always a choice.
Well, I imagine if you live in Ireland, or you live in the US, or you live in Africa, you look around you with in the environment you're in, and whatever vision And even if you're not calling that, because we all have a vision for the life, even if that vision is my life is going to be miserable and you haven't consciously created it, you still have a vision. It's an unconscious vision for your life. It sounds like what you're talking about is consciously creating, designing a vision for your life. So, but I get that that vision is the reality we have around us. So the first step is, it seems like what you're suggesting is becoming aware of that, and something has to shift your awareness where you go, okay, so my vision is limited by the environment I'm in. I became a devotee of Tony Robbins as well, probably around the same time. Um, and certainly I agree, stepping into that environment, that must be, or stepping into an environment where people are challenging how you're thinking, that must be very difficult for someone living in I mean, a states like a place like the US, there are lots of opportunities even in Europe, but when you're living in Africa, that's got to be extraordinarily difficult. So to change your vision, and where do you find that where do you find that environment is going to be different for you?
So one of the things that you hit on is it's so true, and I'm very fortunate, and you're very fortunate. We're in Western cultures
Mm,
where I mean, there's
mm,
there's a reason that so many people want to be in the United States because there's opportunities,
yeah,
and I've been all over the world, and a lot of places it's not the same. I mean, it's very different,
no.
and people aren't breaking into Peru, like they're not trying to invade, like that's not a thing. Where
Yeah.
the question, where do you find people? I mean, now that we have the internet, you can find anybody and
Mm,
everybody, and you can decide your influences. It's not about who's
mm,
in the house next to you or the hut or whatever.
yeah.
It's literally choosing who am I going to be influenced by, and the reason is when you have certain people's voices around you and they're talking a certain way, even if you're a fly on the wall and you're just listening, it becomes normalized.
Mm,
Like I always have a mastermind where I'm around people and I've outgrown them over and over again. And then I go, oh, my vision is way bigger and what I'm doing is bigger. And it's not making anybody wrong. It's just acknowledging, okay, I know where I'm going and I want to be around the people that have already surpassed that so that when I'm around them and what I'm hearing is the normalized place of where I'm going. If I'm constantly around people that are talking about how they're going to pay their electric bill, that is not going to inspire me to think the way I need to think if I'm and it's not about making it another $1 billion. It's really about what does that represent in the impact because you don't make a billion, you don't create a billion unless you're having an impact on millions of people. And that's the whole point of wealth from my perspective. It's really stepping into the potential of why we're here. So these billions or whatever that number is, it's saying, what am I capable of? And if I'm doing half of what I'm capable of, I'm going to end up on my deathbed saying, damn, that and having a lot of regret. That's impossible for me. After I experienced that with my dad weeks before he died, he literally said there were so many things that I wanted to do. I saw regret. It burned and seared into my soul. And I said, no way, no
mm,
how. I'm going to go all in and everything I got, I'm going to leave it behind. And that's I think that's one of the most important things for people. Whatever your calling is, go for it, freaking do it. And so at the end you say that was amazing.
mm. I'm guessing a lot of people haven't. No, I'm not guessing. I'm certain a lot of people have no idea what their calling is. It's clear you're. No, I mean, it's clear creating wealth is an enormous part of your calling, and there's tremendous purpose in that. If there wasn't, you would have stopped a long time ago. I'm sure you could have. H- How did you how did you find your calling, and how do you think? Because we know right now a lot of people listening to this won't be at the point of success. They're listening to it because it's something they want to create, or they're stuck at a level and they don't know how to move with that. So, how do you go about finding a calling that's going to pull you and drive you to the degree that you have found?
I think we bump into things. We bump into, and what do you bump into? You see problems. You hear something is going on that bugs you. It makes you. It like for the focus on for what I'm doing and the unicorn, if you will, is solving the housing crisis, and it's all over the place in the United States, around the world.
Yeah.
There's a lack of housing. Things are getting more expensive. Why are things more expensive? Couple big reasons. One, there's not enough supply. That's a big problem.
Mm,
So there's a lot of problems. People are hungry. You can go solve that. People are they're in pain. Like there's unlimited amounts of problems, and something is going to touch you. You're going to say, you know what, that really matters to me, and so that it's not about necessarily finding it. It's just being aware and being open. And if you move around in the world, you're just going to bump into something. I mean, that's and it's this idea that it needs to be the right thing is bunkus. It doesn't need to be the right thing. It needs to be
Mm.
something that you do.
Yeah.
And if you say, okay, that
Yes, something is a whole lot better than the right
right.
thing.
People say, which business should I do? And I said, I don't know. Do something. Anything. Go
Mm.
start a lemonade stand. Then when you realize this is not, I'm going to learn something here and I'm going to stop it, shut it down. And so it's people say, what do I invest in? I'm like, buy an ounce of silver. Do something. And they go, oh, I go, do something different than what you're doing today, what you've already been doing, because you have a life that you've already created. You're going to keep recreating the same thing. You've got to
Mm.
shift yourself. You've got to evolve. And it doesn't really matter what you do. I mean, I can't say that enough times. It matters that you do something and then leverage from that, like 70 plus companies. It didn't matter that I didn't have the right company, if you will. They were all the right company in different ways of learning and experience
Mm.
and growth. That's the whole point.
I don't know if you've ever studied under Keith Cunningham, and if you've been in Tony Robbins' world, you've probably come across Keith. But something he frequently said, because I attend a lot of his workshops, and he would say, "Name any business to me, any business. Sorry, any business type, no matter what it is. Retail, whatever. Doesn't matter. Name any business type. Give me a week, and I will come back and I will find two companies. One who've crashed and burned, and one guy has become a multimillionaire in that business." And I think it's a very, very valid point. What he was saying is, don't hang around waiting for the right business. Become the right business owner, become the right entrepreneur, and go and chase something. But also, I mean, you've demonstrated that if you go and find the something, and it turns out that it doesn't work, you will be older and wiser, and you move on to the next, and you keep moving on. I certainly have failed in a lot of things. I've lost money in a lot of things, but the distinction is, I've gone. I remember standing in with a friend many years ago, and we were talking about stock. I like investing in the stock market because it's simple, and he had a big loss in the stock market. I'm talking maybe, I don't know, 10, 15 years ago or something. I had also lost in the stock market, but the difference was we defined it differently. He defined it as, it's dangerous, stay away from it. I went, okay, I did something wrong, because there's so many wealthy people who've made money investing in the stock market. What am I doing wrong? And I kept researching that until I discovered what I was doing wrong, and I started doing it right. And I have a simple way I do it. It's just my way. It's just simple, but it works for me now. And I a reasonable amount invested in the stock market, and I'm very comfortable with it. But I think it's that perspective and that definition of, am I continually learning, or am I going to beat myself up over failure? Because if you're beating yourself up over failure, you just you're not going to make any progress.
No, and honestly, what a lot of people do is they don't understand. Like it does in investing. I used to study and teach with a guy named Van Tharp. We actually taught, and Keith Cunningham and I all taught together like 25 years ago. And Van has passed on. But he was like the trader's coach. He was based in North Carolina, and he would teach people about position sizing, and like 85% of investing and trading was psychology, and it was making sure that your position sizing wasn't such that you threw everything in, and you when you took
Mhm.
losses, you're like, okay, I lost 1% or 2%. He was teaching these
Mm.
fundamentals and then getting your people's heads right. But the problem is most people are crazy, and they go into investing in stocks, and like one of the times I lost all my money, I thought, oh, this is so easy. I'm going to go in there and use margin because I can double the amount of investing. I lost all my
Yeah,
money in one day, and I went, oh, wait.
yeah.
Margin is dangerous because I didn't know what I was doing. It's like a
Mm.
gun or fire. They can be used for really powerful and useful things, or they can be lethal. And margin was the same way. And so it's like you mentioned these people like Keith, and there's people out there, and people have experience, and you're going to have your own experiences, but you don't need to have every experience that other people have had. You leverage off of their stuff, and you get trained, and then you it's there. We just don't have enough time in our lives to do everything on our own and learn everything by trial and error. But you do have to be willing to have a little bit of blood and mud in your process.
Yeah, but nor should we, because when you drove your first car, you didn't step in and go, "Okay, I'm going to figure this shit out." You didn't. Someone got in, maybe your father or someone sat in and told you how you did it. Eventually, you figured it out and you got going, but you didn't sit into it and go, "I'll figure this out myself," because that would have been completely stupid. And um, and the same goes with everything. There are lots of people teach you out there, but when you're saying that, I'm aware because I have a podcast, a YouTube channel, and that sort of stuff. I'm aware of how many dishonest people there are in that space. People who just want to they want to sell a course. Or by the way, I'm not saying something wrong with selling courses, but what I'm saying, their motive is to do that. Their motive is not to. So the motive is not to help people. Their motive is to benefit from people, to make money from people, and that's a risk. How can some, and particularly by the way in stocks and shares, a huge risk in that. How do you think people can discern between the one and the other?
I look, especially in the money world. So, like, if you went to a doctor, here's a good analogy. You go to a doctor, and your doctor is 400 pounds, and your doctor's giving you advice on how to be healthy. You need a new doctor because you're getting advice from somebody that's a hypocrite and it's not they're not living. And I think that that's really important when you think about money. If you're going to get trained, if you're going to learn about stock trading, I want to see the person's track record in reality, not the one that they made up and create, used with AI. When somebody's teaching you about wealth creation, like I can teach somebody about wealth creation because I've started all these companies, I've created tens and hundreds of millions of dollars in both shareholder value and personal net worth. I know the process, and it wasn't just some lottery event. It was 30 years of doing this stuff. So I think there's a pretty consistent track record. And and so my question is, you got to go deeper. When somebody pitches you, say, all right, where are you coming from? Are you just really good at marketing? And if you are, maybe I should
Mm.
just learn marketing from you. But if somebody's teaching you about money and wealth, like there was a resistance I had for a long time. I helped people with money, but I always felt kind of like, do I really, is this really authentic? Am I, and, I'm telling people, here's how you make all this money. And, and I'd made money, but I felt like I needed to go deeper into the creation of businesses and really and move past the make a million or two and make 100 million. And that's the answer to the question. Go deeper, vet the people. It marketing makes us want to buy. I mean, the amount of dumb crap that I've bought because somebody was really good at marketing courses and things, and I
Mm.
have them and I never started them. I was like, wow, that was really good. I should learn how to market based on them marketing. But their actual stuff, what are they doing? Most people's stuff is repackaged crap. It's like sausage that got ground up into new sausage. You have no idea what the origin of this stuff was. Some hooves and lips and whatever. And that's the question when you're talking about money and investing in business. What's the origin story of the person? Like, ask them for their balance sheet. Somebody tries to sell you insurance, ask them for their personal financial statement. Do you actually
Mm.
buy as Keith says, are you
Mm.
eating your own cooking? Like, is
That's what I was going to
yeah, I
say.
mean,
Yeah.
that's a reality, and most people aren't, or they don't. You got to
Well,
go deeper.
he has another expression where he says, "There's the hay before it comes into the
Yeah.
horse, and when it comes out of the horse." And most people are selling the latter. You mentioned leverage earlier, and when it comes to margin stocks, and certainly it's something I avoid. Sorry, certainly when it comes to investing in the stock market, I won't use margin at all. Um, what's your thoughts on leverage? Surely, I mean, because I know you invest in properties. Obviously, leverage is a big part of property market.
That was one of the things that got me in trouble with real estate, and I did a lot. At one point, I had 150 houses, and I was developing condos and apartments, and there was a lot of debt. It also got me. It murdered me in 2008 because it's this great accelerator, and if you're right, it's amazing. And you feel, oh man, that's so easy. And if you're wrong, it
Mm.
kills you instantly. Like people are seeing that in the multifamily space when interest rates went up way more than anybody modeled out, and all overnight, pretty much in a period of 12 months, most of the properties that were out there that had been purchased were underwater. They were worth the equity was all gone. So like when I founded FrameTech with my partners, one of the things that we did is we raised a significant amount of money. The first thing we did was raised $40 million in equity. Very patient. There's no margin. There's no pressure. Now we put pressure on ourselves, but we didn't go borrow the money. Now I don't know that we could have. I don't, because people think crazy idea.
Yeah. You got external investors as
100%.
opposed to going to a bank.
Yeah, banks laughed at us.
Yeah.
The banks are
Well,
like,
the investors have the risk.
yeah, and
Yeah.
investors have vision. Banks don't have any vision. They're the ultimate scaredy cat. And I use banks,
Mm.
but and the bankers know that's what they are, and and so it was thinking about this. There's a lot of things that you don't know when you're starting out, and you need to have patient capital with margin and leverage. You've got to be really thoughtful about how much leverage.
Mm,
I had properties, lots of properties that were 90, 95% margined. I had no room for
mm,
error. There was no margin for error at all. And that's incredibly stupid to not have any, because things happen. You can't control everything. And when you're that levered up, it also puts pressure on you to where you can't really make decisions because you're under the gun. You're literally going to starve to death, or the thing is going to eat you. I mean, it
mm.
gets hungry. When you have property and you have debt, it never stops. So there's also something that people will argue with, because they'll say, "Oh, debt is so cheap. If I can borrow money for 5% and make 10 or 20, I'm using the bank's money, or I'm using whatever." And I think that there's value in that at in a part of your life. But somebody that I've known for a long time and have taught with him is, and people know Robert Kiyosaki, and he
Yeah.
he loves debt. And he talks about it all the time. And I think that that's true, and it's false. And the false part is, there's a point where the very, very wealthy people I know use very, very limited debt. They do not have debt on their personal residences. They have more lazy balance sheets. They don't have 90% debt. They may have 20 or 30% leverage. And so there's a different thought around this stuff. Poor people and middle class people tend to do dumb things with debt, and rich people, very, very rich people, are a lot more thoughtful, and they can have things go wrong without them collapsing. And that's a big shift.
But that's also because I think they've gotten very rich probably because they've made lots of mistakes. I mean, things have fucked up for them, excuse my language. And that's why, and probably, I know you talk about having lost 20 million, that probably a very interesting story to hear. But when you do something like that, and certainly not to that extent, but certainly I found myself in deep water around 2010 when the property market crashed here as well. And the deep water was because of debt on rental properties. And once you find yourself in that situation, then you become aware. I mean, in principle, if you can borrow 5% and make 10 or 15, 20%, happy days, why wouldn't you? But there's two things. One is, well, the interest rates may go beyond 5%. And certainly making 10, 15, 20% is a good return. What if that changes? What if the market shifts and now you find, and the banks just want their money back? So I think once you've found yourself in that situation and you sat with a banker trying to explain why you can't pay them back, it makes you a little bit more cautious, makes you a little bit more risk averse. Certainly I'm more risk averse than I was.
There's a number of quite a few people. I've gone through these cycles, and that's one of the values of having been around doing things for 30 plus years, is you go through cycles. And the value of having mentors that are in their 40s, 50s, 60s. Keith is now in his 70s, and it's, the
Yeah.
people that have been around through cycles, because things rhyme.
Mm.
And it's funny, every time there's a big boom in something, there's a bunch of 20 somethings in early 30s, and they've never been through a cycle, and they go, "Oh, it's this." And I
Yeah.
go, "Is it the same thing?" And they go, "No, it's new." And I'm like, "Yeah, but it's the same thing." And th- there's there's an interesting experience when you've gone through the cycles. You just tend to calm down a little bit, and you're
Mm.
like, "All right, well, I've seen this before." And it's useful to have people around you that can give you that type of perspective. I always say that they're grayer, balder than you. Like, you got to have those
Mm.
people. There's some internet sensations that I think they're good people, but they're giving all this financial advice. They're 25, 26, 28 years old, and they're telling you how to make all this money. There's one guy who does great content, interviews great people. And it's funny because he talks about, he's worth 10, $20 million or whatever it is. He's made that money in YouTube revenue, and then he talks about
Yes.
all the real estate he's bought. I'm like, yeah, you bought that with YouTube revenue. So you really don't
Mm.
have any right to tell people how to invest in real estate unless they started with YouTube stuff. I think having an honest experience, and being like, most people don't want to talk about when they lose money or they make a mistake. Well, I love talking about it because I learned so much losing $25
Mm.
million, being -5, going homeless. That was a gift. It was really valuable, and it showed me that my ego was in charge of my life, and the arrogance was there. And man, the universe, God, needed to smack me in the head and drive over me a few times. And I go, okay, got it. All right, let me change the perspective. Let me think about externally how I can serve other people, instead of just how I can get more money to have more hedonistic experiences.
Well, certainly arrogance is a big mistake, because when you're arrogant, you are asking for life, the universe, wherever you believe, you are asking for it to give you a smack in the face, and mostly it does. Um, outside of your businesses, um, what led you to? Obviously, you do some mentoring and speaking. So, what exactly do you do in this world outside of business, and what led you to doing that?
So I had an old friend that always told me you should have three people in your life. You should have people that you're learning from that are generally older, wiser. You should have your
Mm,
peers that are doing stuff similar so you can talk about your stuff. And you should have people that are up and coming that you can teach. And it's important to have all three of those. If you just have one or just two, there's a missing element of the circulation that happens. And so I've enjoyed the experience of working with people one on one, and there's a time and a place for having masterminds and things. And it's funny because when you're teaching, you learn as much as when you're the student.
mm,
So I tend to go in there and it helps clarify thinking. Like I've written 12 books, and why did I
yeah.
do that? Because it helps me clarify my thinking. Like when you
Mm,
think you know about something, try writing a book about it. And you realize you're a crazy person because none of your thoughts actually make any sense until you put them on paper, and then you're like, what? Who is that psycho? Are you drunk?
mm.
It's it. So
Have they all been books on finance?
there's it's finance, personal development. They're like in 2012, I wrote a book called Reinvented Life, and that was about the
Mm,
experience of building things up, being very externally focused, and then understanding through the crashing and burning and that meltdown things that I wouldn't have understood without the loss. It was a recognition that winning is a terrible lesson. It's a terrible teacher. And
mm,
losing and getting wiped out is far better. You tend to pay attention to the things that hurt and you remember them. It's you don't want the pain
yeah.
again. We tend to be pretty good at remembering the things that were hot, that burned us. And so that
Mm,
was one of those books. And I've written books on gold and silver and retirement accounts. And but Unicornomics is one that I wrote uh, 8 9 years ago, and it was the principles. It was the foundational 15%, and this come from work that I did studying Buckminster Fuller. The foundational 15% for any business is there are these key principles that you must have, and if you don't have them, this is why most businesses fail. They don't have those foundational pieces. That first 15% gives you an 85% likelihood of succeeding, and that we're talking about the companies that are around 10 years from now, as opposed to 99% chance of dying. Well, why? Because you don't have those principles. And those principles,
So what are some of those pieces that we have to have?
so one of them is being conscious about your capital, being conscious about your mission, being
Yeah.
like really thinking
Mm,
about these things. Who's on your team? Like we tend to be undercapitalized. We have the wrong team. We tend to be cheap. There's all these things, and so I wrote this little mini book, and it was like you could read this thing in an hour, and it was meant to condense and boil down those principles. Part of it, I wrote it so that I would go back to it and keep refreshing myself,
yeah.
so that I wouldn't do the dumb things. Like, wait, I know these things, but I'm not doing them. So that my team can hand
Mm.
me the book and say, "Hey, page 7, you wrote this. Why aren't we doing it?"
Yeah,
I
yeah,
go,
yeah.
"Damn it, you're right." So
Exactly.
it's useful for me as much as it is anybody else.
And in the coaching, who do you coach, and what sort of what type of coaching do you do?
So the coaching has been really funny because it's been accidental. Like people will just randomly say, "Hey, I want your time," and so it's not something that quite frankly, I'm just too damn busy to be doing it. And it's
This is what amazed me when I saw you did coaching, and people would go online and book, go into your website and book you. I was thinking to myself, where does the guy get the time? Well, where does he get the time, and why? If you don't need the money, why? But
it's mostly because somebody is so ready, and it's awesome to see people move. I've had people show up, and usually they end up they're investors or something, and it's an accidental thing. I'll spend time doing a map, a millionaire action plan with them, and it's really fun for me. And most of that stuff is because quite frankly just been free because I enjoy doing it. But I don't do it with just
Mm,
anybody. I'm doing it with people that are like, hey, I am ready. I'm here. I'm vulnerable. I'm honest. And when I
yeah.
sense that, I'm like, cool, you're ready to make some breakthroughs. And so I'll do it. And then there's a mastermind that's being launched this summer called 1522 from Proverbs, and it's about bringing people together, and the power of being around people and the stewardship around connection is it makes us more powerful, and it's a better experience of life. So I thought this would be a really useful thing to be able to bring people. and leverage off of what I've done to give people those steps, because there's so much information. We are literally drowning in information and we're starving for wisdom. So this is the gap. Like everything that I'm going to say, you can find somebody quoting it on the internet, and it's more of just consolidating it down and knowing exactly like which button to push right now. Like you can ask ChatGPT which button to push, but it's like there's an instinctual understanding that I have from pushing all the wrong buttons and then some right buttons over 30 years that's useful for people. I wish I had me 30 years ago. It would have saved me a crap load of pain and a lot of money. So that's the value of having somebody that's been around.
Without that pain, you wouldn't have become you.
Yeah.
I remember flying to Austin, Texas, to spend my first 4 days with Keith Cunningham on the 4-day MBA. I was blown away by the guy because he's a master of managing small businesses, and I learned so much from him. So that was it. I came home and I spent the next year, I mean, massively putting that into my business. And then I got an email to say he was coming to London, and I go, I've just seen him. I thought, but if he's coming to London, how often does that happen? So I'll go to London and I see him, and I did the course again, the same course again, but I wasn't. I'd shifted in those 15 months so enormously that it was consolidation of the old information and so much learning. So I think we can always learn, and there's always so much to learn. Um, I'm going to let you go very shortly. I'm conscious of time. So you got to give us the very quick story of losing 20 million and what you learned from it. 90 seconds.
Yeah.
I'm
So
joking.
it's
But
what's
we'll wrap up with that because people are going to be going, what, tell me about
so
that.
in my 20s, I bought houses. I went to some seminars and I did what they said, and I bought some houses, made millions of dollars, had my Ferrari, and then in 2004 and 5 sold off almost all the houses, basically made millions of dollars in cash, and went and said, "Oh, you know what? That was so easy. I'm so smart." And so I thought I was 10 feet tall and bulletproof,
Easy.
and yeah, I went over and started buying apartments and building condos and doing all these crazy things at the same time. And everything, so I had like 7 projects I thought would make me at least a million or two in each project, and I lost net more than a million in each one of these 7, and the whole portfolio
Wow.
died. And so I went from a $20 million portfolio to -5 in 12 months. And what it taught me is that winning is a terrible lesson, and that when you leverage everything, you're going to get caught. Like you can't bet black or red constantly. You're eventually going to lose. Like it's just statistics. And then I realized, wow, it's even though that sucked, it didn't kill me. And there was so much value in it. On the other side, it was like one of the best teaching moments of my life. And it led to birthing unicorns. So that was a really valuable thing. And it doesn't matter if it's 20 million or 20,000, if it's everything you got, it still sucks.
It's all
But
gone.
it
Yeah.
was also incredibly useful, and I'm really grateful for it.
And that sounds like, as we close, just a great lesson. That lesson that, well, it didn't kill me. I learned from it, so I get to move on. And I think if people can take anything away from your experience or this conversation, is that as you go to build anything and you create a vision for your life, you're going to get knocked down. You're going to get kicked back. It's going to hurt. You're going to fail. The question is, will you get up and will you move on? And I know it sounds like a cliche until you speak to every entrepreneur and you go, oh no, it's exactly what happens.
It is. It's a consistent thing,
Damien,
100%.
Damien Lupo, it's been an absolute pleasure. Where can people find you? I will put in the show notes, but just tell people where they can find you, where they can find your books, your coaching, and where they can find it all.
Yeah, if you want to grab the download at turnkeyretirement.com, you can get that. And if you Google me, you'll find all sorts of stuff. And that's also fun. But I
Cool.
think that a really useful takeaway for anybody on Earth that's trying to understand how they move past money, that download at turnkeyretirement.com is really useful.
Excellent. Well, we will put a link in the show notes so people can, and I recommend everyone downloads that. I'm going to download it myself. Damien Lupo, it has been a pleasure. Thank you very much.
Likewise, thank you very much.